Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me today, we have Chris Dearborn. He's a managing director at Nasdaq's Market Intelligence Desk. And Chris, while the Nasdaq-100 has been outperforming the broader market on Monday, the action today is quite remarkable with the reversal stock sell this afternoon, with the Fed announcing it's going to buy some individual corporate bonds.
Absolutely. It was really a broad-based rally off of this morning's opening lows, and it's really showing you that people today were paying attention to what the Fed said or reiterated, actually, and also that last week's sell-off, even though we saw a bit of a rally into Friday, people are kind of bottom fishing here a little bit, hoping to trade the trends, and today's reversal is significant, not only for the Nasdaq-100, for the broader market. The NDX last week was only down 1.6%, outpacing the losses for the broader indexes, which was significant. The NDX also made a new high last week, and it's rallied almost Friday's close was down 4.3% from that high, and today we're up almost 1.4%, and it's doing much, much better. It's a nice candle on the chart.
All right, let's take a look at the Nasdaq-100 daily. Take a look at the technicals.
So when you look at the chart, what we're looking at here is a couple of things. First, I want to point out the bottom, the relative strength index. You got a high 50 number there, 57 right now. It's showing at 59, showing that we've got significant room to run to the upside, and we're far from being in an overbought condition. Last week's RSI was a little bit higher, touching over 70, which is significantly overbought, and we pulled back there, and hence the index pulled back on Thursday and Wednesday as well. And what you're looking at here is a nice rally engulfing that last candle, which is telling you that you have significant buying across the board. And with that, you're seeing the lows and the high from yesterday being engulfed by today's candle. And that means that you have a clear buy signal for those who are following technicals in the index, all things being equal. So with that coming into fruition, along with the Fed, again, restating that they're going to buy individual corporate bonds, they announced that they were looking to do that last month. And with that, you're looking at people who are going to actually buy the bonds in the open market and then sell them back to the Fed at a higher price. So that's kind of interesting for folks, and they're going to get cash for those bonds. So then they can redeploy that cash as they see fit. So presumably a lot of that's going to flow back into the marketplace. So it's a nice backstop for that section of the market, with room for them to put money to work in other sectors, presumably possibly other treasuries or even into equities. And that's good news for the markets here. So again, this engulfing candle, if we can get above and stay above like 97.85 to 97.90 level where we're trading right about now, that would be a very positive close and a very significant buy signal for the index.
All right, and Chris, taking a look at the heat map, this is one of my favorite charts that you pull for us, where you can see what underlying constituents are outperforming within the index itself.
Yeah, you've got a lot of the stay-at-home companies that are doing very well today. Zoom made a new all-time high, still performing very, very well on the back of everything. Netflix has had a good day too. And what you're seeing is a reversal. The ones that are losers here really aren't off that bad, and they've rallied back from opening down over 2% this morning. The majority of the higher highs that you're seeing here are coming from a number of companies that have been the leaders, such as Apple, Amazon, Tesla, Microsoft, NVIDIA. Nice to see DXCM and T-Mobile up there. Facebook is doing well today too. On the downside, Costco, Adobe, Ross Stores, even though they're not off much, and they're still performing very, very well. So you're seeing a mixed group here. Again, the large cap tech is the leader here, but it's nice to see a few of the other names up there as well. EA is up there, ATV is up there. They haven't been up there as much. JD.com with the debt offering last week, not debt offering, the equity offering in Hong Kong, which was well received. Again, you're seeing a lot of winners here across the board in multiple sectors. And that's why we're seeing this as a broad-based rally across all sectors, and the NDX is one of the winners here.
Yeah, well, Chris, how about UAL coming out of the index for one of those newer technology stocks, DocuSign, making its way into the index on June 22nd. I mean, it's really telling the direction that this economy is going in.
really is. I mean, American Airlines got, had issues, as did all the airlines. They had to be moved. You've had a number of other companies that have been moved in and out, and the performers are being moved in. So what you're seeing here is a rotation of some of the changes here as the companies fall below the weighting index for 2 consecutive months of 0.1%. And with that, you're looking at companies that have been outperforming that just weren't part of the Nasdaq-100 back in March and April. If they were, we'd probably see even higher highs than we saw last Wednesday.
Great point. All right, Chris, thanks so much for joining us.
Thank you so much, Jill.
All right, thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.